I'm Patrick Camuso, founder and managing director of Camuso CPA. For nearly a decade, my firm has worked with investors, Web3 businesses, and protocols, assisting them in reconstructing their cost basis histories, setting up accounting systems, and deal with the tax issues that arise when you're transacting on chain. And we've done this long before the 1099-Ds existed. What I want to talk about today is why your 1099-Ds are going to be missing cost basis and how you can fix this before you actually have issues arise from this when IRS matching kicks in after you file your tax return. So this is going to be a very important topic. So let's get right into it. You've probably heard about the 1099-DA at this point. And I think, the first thought of many investors, many business owners is, all right, I'm getting a tax form. This is going to make it easier for me. I maybe don't have to worry about calculating my transactions, or maybe I have to worry about it less. And that's actually false. And, it's a very dangerous assumption. And the reason why is that for many years to come, particularly for this tax year, but many subsequent years as well, the 1099-DA is not a full tax calculation. It's really functioning right now as a visibility mechanism for the IRS in just the first stage of getting digital assets into the US tax system. And this is going to be phased over time in terms of the reporting that's included on these forms. So for taxpayers, these usually are not going to be full and accurate tax calculations. Again, the purpose is to standardize this broker data that is going to the IRS, and really what it's going to be used for initially is for the IRS to identify inconsistencies between the reporting of taxpayers and what is being reported on these 1099-DAs. So, this is really one step along the lines of visibility and, a step towards enforcement that the IRS is taking. This is going to keep the burden on the taxpayer in terms of calculating and substantiating their cost basis in most scenarios. So let's go over, the 1099-DA in a bit more detail. And as we delve into this, I want to point out that I've done many other videos, deep dives on, all the intricacies of the 1099-DA, how it's going to affect taxpayers, revenue procedure 2024-28. Those are all on my YouTube channel. I encourage you to watch those. Additionally, on my podcast, The Financial Frontier, I've interviewed many different professionals on the regulatory side, on the broker side, on the advisory and software side for the people that are issuing the forms. So, we've really looked at this from many different perspectives. So again, the 1099-DA, it is an information return. It is not a tax computation. And, it's not going to calculate taxes accurately for most taxpayers. And, I've seen many people say, comparing this to the 1099-B, I've even made analogies to that. It's not a perfect equivalent though. The 1099-B is, reporting securities, and it's assuming that there's continuous custody at the broker level. And what that means is that there's uninterrupted cost basis tracking. And, that's just not the case in digital assets. Assets move across custodial and non-custodial accounts. These tax forms and cost basis tracking requirements are, just starting to kick in. So there's assets that are non-covered that are held by taxpayers in earlier tax periods. And, these types of this context between, non-custodial wallets moving between different accounts and protocols, and, assets that are, long-term digital assets that sit outside of, this tax reporting regime, break this data lineage for brokers. And as a result, one of the biggest issues with the 1099-DA for this tax year and for future years is going to be cost basis reporting. So, in 2025, we're mostly going to only see proceeds being reported. Basis is generally not provided. And of course, again, this is a high level discussion of this. But in most cases, taxpayers should expect to see proceeds reported, and oftentimes basis is going to be unavailable or just not required to be reported on the 1099-DAs for this year. And in subsequent years, it may still not be required because of some of the issues I've outlined related to these non-covered positions that are either acquired and held by the taxpayer before 2025, or they're just transferred from brokers to non-custodial wallets. These even in future years are not gonna be included. But in 2025, in most instances, we're not going to see for the 2025 reporting that's arriving in taxpayers' mailboxes in 2026. To be clear, we're not going to be seeing cost basis get reported in most instances. So this is gonna first of all come as a surprise to many taxpayers, and it's going to create a lot of confusion when it comes to tax reporting time this year. And just because this 1099-DA is inaccurate doesn't mean that it still can't be used from a tax enforcement perspective, because the proceeds are reported. And to whatever degree that the information reported on these 1099-DAs related to your proceeds, to whatever degree that's not reported on the return and then properly reconciled to include the basis and have this all reported correctly from a tax reporting standpoint, to the degree that that's not, those steps aren't taken, there is the risk of a matching error and a notice that goes out to the taxpayer to where, the 1099-DA proceeds are not matching to what they're reporting for, many reasons, because there's many different ways this can get misreported. And then you could be dealing with a tax notice. Then from there, if the response to the tax notice is not done timely and accurately, and there are larger issues related to this taxpayer, it could potentially lead to an audit as well. So, the 1099-DAs this year largely are still putting the burden on the taxpayer. It's not solving this problem for you of doing a tax calculation. You're unlikely to see your basis reported. And then it's up to you to accurately calculate your basis. And, at Camuso CPA, we're constantly reconstructing basis. There's a huge non-compliance rate. So for investors, we'll still go back 5 to 10 years in most cases to have to reconstruct basis. 2013 to 2016, people still come from that time, and we have to calculate them all the way going forward to the current time period. Very common for people to be coming from that 2017, 2021 area that need full cost basis reconstruction. So, people are not up to date on these calculations. And what we've seen is, number one, people don't have their basis calculated at all. That's usually my experience when a new investor comes to the firm. It's, hey, I want to be compliant, but I haven't accurately calculated my basis in the past 5 to 10 years. I can do whole other separate videos on why that's the case, and some of the challenges that taxpayers encounter when they have to report their digital assets, but that's outside of this video. And now, the other thing I'm seeing is that taxpayers are unaware of Revenue Procedure 2024-28. Now, again, I've done whole separate videos on this. I've covered this at deep length, trying to really warn taxpayers over the past year and a half or so. But most taxpayers are still unaware of this, and this changed or clarified some of the cost basis tracking requirements and accounting methodology that's required for accounting for and reporting digital assets. So it shifted from, where we've seen most taxpayers before the revenue procedure, pre-2025 calculating on a universal basis. Meaning if you held a specific digital asset, you would apply a cost basis methodology to it irrespective of where it's being held. This led largely to inaccurate audit trails for taxpayers that were calculating under this methodology. Now what's required with the revenue procedure is account-based tracking. So you need to apply a cost basis to each specific wallet of an account in addition to being on a per asset basis. And it also specified how spec ID should be applied, and it outlined steps to leave standing orders so you can have that pre-sale lot identification to satisfy the true requirements of spec ID. So a lot was clarified in the revenue procedure, and I encourage you to watch my separate videos on that. But the big issue is taxpayers are getting these 1099 DAs. The cost basis in many cases is not going to be included, and then taxpayers are going to be forced to now go back and reconstruct their basis and make sure that they're in alignment with this revenue procedure. And what I'm seeing is a lot of people don't have their basis reconstructed. And in many cases, even if they were able to do that and it was accurately done, they may not still be aware or in alignment with this revenue procedure, which drastically can change the cost basis calculation on any given tax lot. So, this is going to be another issue for taxpayers. That 1099 DA is going to surface to a large degree when taxpayers are, faced with the information reporting that they're getting on the 1099 DA and it's missing the basis, and then they're going to have this tax reporting requirement. They're going to be faced with having to reconstruct this and go through the whole exercise of getting this accurate. And that's something, again, that we're doing at Camuso CPA on a daily basis. We're reconstructing basis. We're getting into compliance with Revenue Procedure 2024-28, and we're making sure that we're aligned from a compliance and tax planning perspective in terms of making sure that, we're complying with the revenue procedure, we're optimized in terms of our wallet segregation and flow of funds, making sure that we are prepared to reconcile all of our data against the 1099 DAs. These are some of the steps that you need to be taking. So, so people are going to be getting these 1099 DAs, and like I said, a lot of it's not going to be including cost basis. So, one common mistake that we may start seeing is taxpayers thinking that they can just wait. Crypto investors, to a large degree, like I said, there's a high degree of non-compliance. A lot of people haven't reconstructed their basis. Now they're going to get these 1099 DAs. So, there is the risk where they may say, let me wait, let me see if we get corrected forms, the basis is missing, this doesn't make sense. That's not going to be the right steps to take. It is not expected that you're going to get corrected 1099 DAs that do include this cost basis information. It is not included this year by design, and it's more likely than not that if your 1099 DA does not have full cost basis information, that it still is accurately reported based off of the current filing requirements. Now, that doesn't mean that it's accurate for you to report on your return. And it also doesn't mean that if you don't report it, that you won't have some of these matching issues or other compliance issues that I previously outlined. So it is crucial that you report this, that you don't sit on it and wait and think that something is going to come that is more accurate. The burden is on you as the taxpayer to reconcile this data with your own accounting and make sure that it's all accurately reported from a tax perspective. Another important point, because once we're at this level now, you can start to see that the reconciliation is extremely important. And one thing to note is that the 1099 DAs are going to be reported with standardized timestamps on UTC time zone. And taxpayers obviously can have different time zones than that. And the records can differ. And that true tax reporting requirements for a taxpayer can differ depending on the time zones. There can be, this can especially be an issue that needs to be addressed and watched closely for taxpayers that are trading at year end. There can be mismatches again, based off of these different time zones. So, it's very important that the time zones between what's reported on the 1099 DA versus your local time zone that you're actually doing your accounting on are reconciled and accurately reported based off of your facts and circumstances as, the taxpayer. So again, you cannot just be blindly relying on what is in these 1099 DAs, but you do need to make sure that it's all reported accurately and, reconciled so you don't have any compliance issues when it comes to tax reporting. So, we touched on this a bit, but what do you as a taxpayer need to do before these 1099 DAs hit your mailbox and before you actually file these 1099 DAs and the potential IRS matching begins? Ultimately, the first step is reconstructing your historical cost basis. And for, taxpayers that have, complex histories that are spanning across, many, many years, this is no small task. And that really is the first step. The next step is making sure that these cost basis calculations are aligned with Revenue Procedure 2024-28. And we're past the safe harbor with that. And again, all the details on this revenue procedure are in separate videos. But the next step is getting into alignment with this, documenting the allocations, performing the allocations, and then making sure that your calculations are in aligned with the account-based regime and you're fully transitioned away from universal pooling. Then the next step is when you're reconciling against the 1099 DAs, you need to take into account obviously the timestamps and the reconciliation issues that this can cause when it comes to pricing and particularly any year-end transactions that are taking place. So that is another step that you need to be careful with. And overall, you need to be aware that you're going to be getting partial, inconsistent tax reporting on this form. And possibly, in some cases, because this is the first year, some brokers may even have these forms go out a bit late. So the burden is on you as the taxpayer to make sure that this is all reconciled and recorded accurately to avoid these compliance issues that are likely going to impact many taxpayers that don't take these steps now. So, the 1099 DA, again, it's not the final answer for your taxes. It's not going to be a full tax calculation. And the burden is on you as the taxpayer to reconcile your own accurate tax calculation accounting with this 1099 DA and make sure it's all properly reported for tax purposes. The big issue that this is solving for the IRS is that now we have digital assets anchored with standardized reporting data from brokers into the U.S. tax system. And, this is going to be used for detection and enforcement as we move forward. So this is, it's extremely important now for you as a taxpayer to get into compliance. Again, I've done separate videos on this, separate articles on this. We're entering what we call at Camuso CPA, the digital asset compliance era. The 1099 DA is one of the big demarcation lines in us entering this era, but it is one of many. And moving forward, it's imperative if you want to protect your bottom line, if you want legitimacy in this industry, to make sure that you're getting into compliance and you're staying ahead of these issues related to the 1099 DA and more. And this is what we do at Camuso CPA. We work with investors, Web3 businesses, protocols. If you're transacting on chain as an investor or as a business, we likely can assist you from setting up accounting systems, maintaining those accounting systems, planning from a compliance and tax perspective, and making sure that when it comes to anything tax or accounting related, that you're covered and that you're taking the right positions and you're really positioned in this industry to thrive as we enter this digital asset compliance era. So if this is something that you need assistance with, if your portfolio calculations are not up to date, if you're not in alignment with the revenue procedure 2024-28, or if you just want to get out ahead of the 1099 DA and make sure that you are ready for when these forms come, that's what we can assist with at Camuso CPA. So you can visit our website, camusocpa.com, and on the Contact Us page, you can set up a time to speak with me directly and privately about your portfolio and your business and see exactly how we can assist you. So I hope you took some value from this video. Until next time, I'm Patrick Camuso, signing off.